Hey everyone, it's Mike Valtos, and welcome to the Orderflows market analysis for Monday, September 25, 2017. And the economic news that came out was actually kind of mixed. You had the Dallas Fed manufacturing report, which showed some strength and basically shows no effects from Hurricane Harvey. The national index, however, did weaken due to drops in August industrial production and housing starts. Gold caught a bid today. It was up about 1.2%. We had a lot of words over the weekend with North Korea. Crude oil was also up. Crude was up. How much was that? We got above $52. Equities, yeah, we eased off a little bit. We settled around just under 2,500. Angela Merkel did win, but it was kind of disappointing, and the euro went south. So we'll see what's going to happen over the next couple of weeks. Again, brief disclaimer: this presentation is for educational and informational purposes only. Should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, the tools we use in this presentation are the same. It's the Orderflows Trader, which is the volume footprint chart, the Delta Scalper, and the Price Rejector. Delta Scalper and Price Rejector are two additional tools. Now, the Orderflows Trader has a few extra benefits that you don't see in normal footprint charts, and one of them are ratios and Orderflows divergence. Which there's a trade setup that happens every day, almost every day in the markets, and when it happens, it's quite potent. I'm going to show you today. I occurred in the bonds. Let me get my bond chart here. Okay, so this is the bonds. Bonds, we had been in a pretty confined range most of the morning. We started breaking out of it around 4, started making these new highs, but before that, very tight range. And right off the high here, you've got going into the high, you have the delta surge given a buy. Coming off the high, you got a delta surge given a sell. Again, I'm always looking for reasons to be selling at a high rather than necessarily be buying. Although, you got some bullish signs here. You got, the delta surge. You've got buying imbalances here. Does the market go higher? Yeah, it goes higher, but it only goes higher by about 4 ticks. Then it starts going sideways. You're getting some signs in here that the market's ready for a sell-off. You got delta increasing. You've got a nice big selling imbalance here. You got bearish ratios, and the market does sell off. It sells off down into this low of the day down here at 834. And you got a bunch of stuff here. You've got divergence right here, so you got the positive delta on the low. Next bar, you got the ratio. Even in the bar where you're at, you also have a ratio, so you got your divergence and a ratio. Next bar, you also got a bullish ratio. It's one thing to look at a ratio, but you got to understand what's bullish, what's bearish, right? I mean, other software, they're starting to add these ratios in there, but they don't necessarily teach you how to use them. It's nice that they're adding them in there. I mean, because as far as I'm concerned, I'm the guy that was the first one to put them out there. But they're just taking my ideas, but they're not. They don't know how to use it. They're just putting it in because people say, hey, I want to look at our ratios there. But I mean, it's kind of pointless to have the ratio if you don't, have the proper understanding of what to look for. But anyway, you've got the bullish ratio, divergence, price rejector here. This green line is the price rejector. So I know that there's price rejection coming down in here at this low as well. So that's for me, that's a pretty confident sign that this market could go higher, because we're seeing price rejection right above, the 154 even. What does that mean, price rejection? Well, it means people are rejecting these prices. They don't want to be selling below, 154, so they're rejecting prices below. And what's going to happen is the market's going to move up, and market moves up. We go up from our low 154.02, but that's not where you'd be buying. You'd be buying somewhere in here around 6 or 7, and boom, rally up to the highs and keep going up, making new highs. Then you hit your high level. Not much happens. You just basically go sideways after that for the rest of the day. But again, this is the trade right here. Again, how many points is that? Say you're buying it at, this yellow line is the opening price of the day, which is 154.08. So say you're buying it even at 08. Say you're not buying it anywhere, at 7 or 6. When you buy it at 08, it rallies all the way up to 20, pretty quick over the next hour, and goes higher. So it goes all the way up above 28. So that's, I'm not saying you'd get 20 ticks out of it, but I know some people that would, but that's the trade. That's the trade to have today. That's the trade of the day, as they watch these guys. But 5 years, very similar. So again, this is the ratio and divergence that I talk about almost every day. Some days it's not as pretty as this one, but this one's pretty darn nice. 5 years, you didn't have a ratio and divergence, although what you had in the 5 years, 5 years were moving quite nicely today. And let me just find my chart. Here it is. But you had this nice signal here, just right around that same time, 834. But what do you got in the 5 years is the delta scalper giving you the buy. Excuse me, take something to drink. And this is actually quite nice. So earlier, this cough. So earlier you had your divergence, and then look, you got the delta here, 4,000, then minus 3,000, minus 900, and then plus 3,000. So the delta, even though we're going lower on weakening delta. Okay, you can see how it's actually, the bars are actually rising. I don't want to say rising delta because it's still negative, but it's getting less weaker. And then you hit your low, very strong positive delta. Delta scalper kicks in, telling you, hey, you should be, you're seeing a shift in here from a supply-driven market, a market that's going lower, to a demand-driven market. And again, watch what's happening in this market here. Okay, you have this one buying imbalance. Okay, but here you got 2,700, 1,300, 5,000, 800, 3,000. Then you're coming down in here. You're not at the turn yet, but you're seeing some buying coming in 26.81. Still down. You still got a little bit of selling left. And boom, you hit the low here, 155 lots trade, the swing low. And then the buying just comes right back up. Boom. 2,000, 8,000, a nice big positive delta. Next bar, 3,000, but delta scalper kicking off here. So you should be looking to be buying somewhere around the 24 level. And what happens? Boom, we just rally right all the way up to new highs. Where we come up in here around the 28 and a half level. So from 24 up to 28 and a half. That again is a nice move. Even earlier, again, tight range. It's very similar to the bonds. You started making your highs around 4 new highs. Then you sold off 834. You got your turn as well as you just had in the bonds. That was at 834. So people ask, is fives and bonds move the same? Yeah, in general, yes, but the signals you're going to get are a bit different. All right, so before I go into, I'll talk about crude now, but before I go into crude, I'm going to show you this crude chart. This is 8 range. This is the bar chart. This is the delta scalper on here. I also run bar charts with the delta scalper because sometimes I've got a lot of charts open, and it's easy for me sometimes to see these indicators on a normal bar chart. But it's easy for me to explain sometimes because sometimes I try to explain it on a bar chart, on a footprint chart, and people get confused with the numbers. But anyway, here, this is a nice buy here. So this is around 3:40 in the morning. You're getting along somewhere around 50 double, 50, 55. And what's it do? Rallies all the way up to the morning. Around 9 o'clock, you get the sell at 51. I don't know what that is, 51.30. So from 50.55 up to 51.30. What is that? 80-cent move, more or less. You get the sell here. It doesn't really work out. It just eventually goes sideways and then starts rallying. And then you got a trade here late in the day that doesn't work out. So, people will what they'll do is, they'll turn the machine on and they'll just look, oh, the delta scalper gave me a buy here. Yeah, I broke even. Or sorry, gave me a sell. I broke even and then I lost on this trade. Okay, well, did you take this trade? Oh, no, I didn't. Well, it's one of those things. I mean, it's like, well, yeah, you could pick, periods. Yeah, I could show you little periods in here of losing trades, but there's also other trades that you're not taking, and your career is not built on 1 or 2 trades. It's built over a period of time, right? It's a marathon. It's not a sprint. In trading and thinking that, oh, like here, for example, I don't want to show you that chart. It's a terrible chart to show. That's the wrong chart. That's a 233 tick trade in crude, but it's a footprint. Where's my I got one that's a bar chart. It's a little easier to read. That's the NASDAQ. I think I still got it up here. Yeah, here it is. So it's like here, this is the 233 tick chart. Okay. So again, you could say, well, you get a lot of trades going on in here. Sometimes people will say, yeah, I took this trade, I lost. I took this trade, I lost. Well, did you take this trade? Yeah, but I had these two losers here. If you're just going to take a snapshot of one or two trades and say they lost, look at it over the course of a trading day. How many trades you get. Again, 233 tick trade to me is crazy for someone to trade. But yeah, I know somebody that does. I don't know how successful they are at it. For me, it's just too much. I don't want to say noise, but it's just too much action for me. I don't like to be trying to scalp one or two ticks. I prefer to try and get, more out of a trade. 50 ticks, 80 ticks, rather than dicking around in here. Oh, I gotta get short. No, now I gotta cover. I gotta buy. Now I gotta short. Like that, back and forth. There's a time and place for it, but I wouldn't use a 233 tick chart for that. But anyway, let me just jump into the crude oil chart here. If I could find the footprint chart. Give me a sec. Okay, before I couldn't close it for some reason. Now I can't open it. But yeah, there were some interesting things here. So again, this morning, 340 right off that low here. You don't have a divergence. You don't have much of anything there. You do have the Baltos indicator kicking off, giving you a buy there. Then here's you got your delta scalper with your ratio, and the market just rallied. You start running up in here 6 in the morning. You got very aggressive buying. This bar is almost all aggressive buying in the form of buying imbalances. And you take out the highs. You get up here, you got more imbalances. Then you hit this level up here, 51.39. We come off a little bit, start going sideways. Now, this is interesting in here, in this bar here, in this bar here. Look at this volume that's on the bottom of the bar. This is what supportive buying looks like. So even though you got negative delta, why do you have negative delta? It's because you got supportive buying in here. You got very strong volume, 394, 682, 810, 169, even to a lesser extent back here, 747, 680, 58, 348. So, on this side, on this chunk, on this bottom, I don't want to say bottom half, but bottom 4/9 or something of that bar, 4/9, whatever that is. You're getting some very strong buying in there. Even here, you're getting some, as people are trying to sell it and offering it, it's getting bought up here, 600, 800, 700, 400. And it's just very, very nice. It's just very nice to see. And what does the market do? It puts in a nice little rally up in here. I'll say nice little rally, but it's about 10 ticks. You get up here, you got the delta scalper. You got a bearish ratio here at 51.43. And again, I have this trade set up. It's called the O2X trade. And what it is, you got your bearish ratio. Look for a pullback towards that level. 2. Well, that's the 2. So you're looking for a pullback within 2 ticks of that level. And you get it within 1 tick of the high, actually. So 51.43, you'd be getting short at 51. You're throwing an offer when you're trading down here. You're throwing an offer at 51.41, which is 2 ticks off the high. So why is it called the O2X? Is you put a circle around here, that's your O. You throw in an offer 2 ticks off that high, which is in this case is 51.41. That's your offer. Wait for the pullback up there, and then X marks the spot much lower. In this case, it's 20 ticks. Getting short at 51.41 down to 51.21. I'm not saying you would have got perfectly there. Maybe you're getting in here, getting out at 15 ticks, but you're just risking 3 ticks, right? You're getting short at 41, and your stop's just 1 tick above the high at 44 rather. So it's 3 ticks. And what are you getting out of it? 15, 12, 15, 18 ticks out of it. So you're getting, more than a 3-to-1 risk reward ratio. So that's the trade that you want to get. Again, this is the bar chart of the Eurocurrency. The Eurocurrency had a big move yesterday because of the elections in Germany. So just going back to, European Open, it's right here, 1 o'clock. So 151, you get a little buy here. I don't know what you would have got out of it. Then you got a nice sell here. from, I don't know what this is, 67, 60, we'll call it 65, it'll move all the way down here to 50. This buy doesn't work, but then you get a nice little sell here. I don't know if that would have stopped you out right here. A buy here that sort of doesn't work out. And then you sort of sit quiet for another hour or two. Then you start getting some more buys and sells. You got a buy signal here, a sell signal there, a little buy here, another sell here. This buy fails. Then you get a sell signal here on the 20 area, confirm backed up with another sell signal 5 ticks lower. So from 119.20 all the way down below 11900 before ending out the day around just a little bit higher. But again, I don't know what you would have got out of this. You could have got at least 20 ticks out of it. 20 full ticks in the Eurocurrency is nice. Okay, so thanks for watching this presentation. To learn more about trading software using this presentation and how you can profit from Orderflow, visit my website, orderflows.com. And if you want to learn more about Delta Scalper, go to deltascalper.com, or you can be sure to subscribe to my YouTube channel to get more information. I try to post videos up every day or thereabouts. I do have a couple presentations I'm working on. One is about trading soybeans. Like I said, I've been getting a lot of questions, and I've been putting together another presentation on just general questions and answers I get about order flow. So look for those in the next few days. So thanks everyone. Have a great day. Bye-bye.